Good day, traders. This is Richard. Good day, ladies and gentlemen. This is Richard Rueb, and today is Inauguration Day, January the 20th, 2021. The S&P sold off a little bit over the weekend or on the first day, the holiday, this week, first day of the week. It was a holiday, but of course the futures were open, and they had sold off on Friday. This is Friday. And so let's see if I can just type on that a little bit here. There's my T-square or my text tool. So let's see. That'd be Friday. This here would be Monday. And market tried to get down on Friday, but something drove it up on Monday. And then now we're up here at a new high on Wednesday, but we got a red candle. And I'm going to go down now to the 15-minute off this. I was on a 120-minute when I drew the triangle. Now I'm going to go down to 15 minutes from this 60-minute chart. So here is the 15-minute chart. And now we're getting this cluster of candles here. So I'm selling it. So now I'm going to sell the S&P future. Let's go in here and see if I can get that to happen. I'm just going to go ahead and take one.
Order filled.
And I'm going to put the stop one tick above this double top here. There's the stop. Here's the target. I'm going to put the target on a round number. I'm in the mood for round numbers. So 3,800, 3,780. That's a nice round number. So if I could get that kind of a gain, I would be a happy camper. Now let's see if I could do that off this. I need a 15-minute, 120-minute candle again. Let's go in here, do it over here on this chart. Now let's spread this out to where we can see some candles. Now I like this so well, I'm going to take it on the live. I'm going to do it live.
Order filled.
And then go into here and change this to live so we can watch it live. So the chart on the right is the simulator, and the chart on the left is live. So now let's take a look here. You can see where the stop is. So let's go over here to Facebook, and if I can find Facebook. There we go. All right, Jacob, I'm taking a live trade here. I'm going to put it on Facebook. I'm in my trading club. Good morning, Ryan. Getting ready to go into Facebook and do a start screen share. I'll do it over here on this screen and get this out of the way. And now what we've got here is a live trade on the S&P future, because we got a double top up here and we have a sell in progress that's been working, and it just went back up a little bit. And you can see that on the 2-hour chart, it's still a nice red candle. And this will work back and forth. And as long as we don't go above this double top here, two 15-minute candles got the same high here. We got our stop one tick above that. That's very important to know.
Divergence
because
signal.
That's where we want to get out. Now, if it makes a new high up there, we'll get out. And from this level down here at 3803 to 3808, that's 5 points, and a point is $50. So $350 it'll cost us. That's our risk. That is our risk. And we always look at risk before we look at potential gain. Now, our gain, if we got all the way down from 3804 to 3797, would be almost double that, about a little bit more than double that, about $600. All right, so this is going to be dicey. I can already tell, taking my money, got $67 of my money already. but we're getting a topping tail here. So that may be good news that we sell off, and we want to sell down here. It might take 30 minutes, and I'm going to go live now and say all that again. Good day, ladies and gentlemen. This is Rick with Swiss FT Radio. We're in a trade. We're selling the S&P future off of this high, where we have a double top over here about an hour and a half ago, when then we pull back here, and that pullback was a pretty good pullback, and so we might go up and be took out here, but I'm hoping that we can get a little gain from this. So I'm going to draw this geometry on here and inform you that we've already pulled back 44%, and the target to the upside is way up here. We're not going up, we're going down. We're short, and right now it's working against us, but that would be the target if we were long. But what we're looking for is a pullback to 78%, and that's kind of a Fibonacci ratio thing that I'm not going to try to explain right now, but it's a tool we use to guide us. So I'm going to take this off the picture so I can see the candles really good. Now, lots of times when we have a setup like this, which is a fractal high here, a higher high than this high over here, and it's the highest high in the vicinity. We go back here for the whole entire trading day since yesterday at 3 o'clock, and right now it's 5 a.m. Pacific time, and yesterday is where we opened at 3 o'clock yesterday, this candle right here. And we made a new high a while ago, and that's the highest high in the neighborhood. And so that is where we might sell off from, because we've been looking for a sell since the weekend, because the S&P is overbought. Now you can see all these red lines here. That's the line in the stand, but that's that blue line right there is the line in the sand where price is biased. The price bias, whether we're bullish or bearish, changes on that line. And with all these red marks up here indicating that we're overbought, that means it's time to think about selling. Because once an instrument, any instrument, these 500 largest companies in America are overbought, and they've been overbought since, well, you might say all year. You might say the last 5 years, but they're up there, and a correction is waiting to happen. A pullback is waiting to happen. And what better period to have a correction than Inauguration week? Don't expect a lot. I just expect about 10 ticks here, 10 points, I mean, from 38.04 down to 37.97. Not even, well, it's just a little over 10. That's about $500. That's what we shoot for in our first volley. Now, we might stay in it and keep on going down to 3,700. We could do that. But I'm only shooting now for 10 points. And my stop is about 5 points between 38.04 and 38.08. And the price of the value of a point in this particular instrument is $50. And the ticks are $12.50. So that's the odd cents here. When it changes from 50 to 25, that's $12.50. When it changes from 50 to 75, another $12.50 in the other direction. So let's see if we can make some money. It's right now they got some of my money, but yeah, if that happens, you got to risk some money. Okay, is it a good risk? Well, I've got lots of indication that I know we're overbought, and we were even overbought on much longer time frames than 120. Let's change this to 240. So I'm going from 2 hours to 4 hours. 240. That's it's going to become a 4-hour chart over here. Now you see that low, that you got a red thing there, okay? And it's come off that low. But if it doesn't make a new high, we're going down, and we're going to head down to there. So I'll move my target down there as we get a little closer to the target, and I'll move my stop down too if I get the opportunity when we get green on the machine. But right now I'm leaving my stop right up there at one tick above the highs. Now what could happen, and this does happen, is that this could turn out to be a failure, and we get another fractal high up here in 15 minutes, 45 minutes, 2 hours, whatever. And then we have a new fractal high. We sell that fractal high, and that's the king of the pile. And we sell that one, and it becomes the anchor up there, and then it comes down. That could happen. So just know all your risks. That's what I'm doing, is describing the risks, because they're more important than your potential gain. You can't make any money unless you know what you're risking to get it. Investors figure they're going to make $10 million on some big project by building a building in downtown Los Angeles. How much money are they going to risk on that? Well, they're going to risk probably $1 million if they're going to make, well, let's say it's going to be a $10 billion building, let's say. What are they going to risk? Are they going to risk $1 billion or 500,000 or 500 million? I mean, how much are they going to risk? That's what they worry about. They don't worry about how much they're going to make. I mean, that may be 30 years down the road when they make that money, after they've been collecting rent and filling the place up. And, now they probably, under these circumstances with the coronavirus, keeping all of us at home, they're probably thinking to themselves, let me just go buy a building that's already built at dirt cheap prices, because nobody's going to show up in it this year. So I'll just buy a building at the fire sale. No point in building another one. There's probably 20 of them that are going to be empty, but they're thinking, what's my risk? Not how much money I can make. They got how much money they can make in the back of their mind, and their bean counters have told them what the prospects are and what the probabilities are, and they have to now make a decision when all the information from the bean counters is at their disposal. So I'm harping on risk, because risk is what we worry about as traders. Businessmen all worry about risk before profit. How much have I got to invest? How much have I got to put down to get this gain? You take it down all the way down to a game of Hold'em or a game of cards, poker. I've got pretty good hand here. You're thinking, well, I've got a potential straight. I got a 4 flush right now. I got a straight flush. That's the most powerful thing in the table. Not quite, but almost. And so I've got all but one little old card. I got 2 more cards to get. Can I get another card and get a flush or a straight flush? Well, could happen. How much money will I put down to see those cards? That's my risk. If somebody else has some really good cards, they're going to call my bet or they're going to raise my bet. And that's going to give me heartburn, because I don't have my hand yet. All I've got is a 4. I've got 4 spades, and they're all in a row. So I've got a potential straight and I've got a potential flush. And either one of those hands, a straight or a flush, will be a winner if I get that other card. It's the right card. And there's only one card I can get. Well, there's probably 2, but my point is, unless I'm starting with an ace, if I'm starting with an ace, there's only one card I can get. But if I'm not starting with an ace, there's 2, one on either side. To get the straight, it better be the same suit. That makes me a winner, a big winner. Nobody else is going to have a better hand than me. Now I've got these chips on the table. We're playing table chips. We're playing table. All right. So now just hold on. I'll come back to this trade in an hour or 2 or 30 minutes. But I want to keep this short. So I'm going to sign off now. And I just got an alert to take another trade. So I'll be back. 8 to 80, blind, crippled, or crazy. I will teach you how to use my right-hand trade to take $500 a day to keep the job away in just 1 hour a day while you watch us trade live right before your eyes.